Hello everyone, welcome to FinTalks. If you want to invest in banking stocks, you must aware of these factors and you have to analyze these values from the banking financial stocks before investing in banking stocks. What are that variables? What are that values? First one is NII, net interest income. On deposits, bank will pay interest. On loans, bank will receive interest. The difference between the interest received and interest paid is net interest income. If the bank is having more NII, it indicates more profitable. If the bank is having less NII, it indicates low profitability of the bank. And next, capital adequacy ratio, CAR. It is the ratio of bank's capital to risky weighted assets and current liabilities. It is measured to know the capacity of the bank to bear risk against loans. How strong the bank is to bear the risk against loans. If the CAR is high, the bank is more strong and more safer. If the CAR is less, the bank is less strong and not safer. As per RBI guidelines, the private bank must have more than 15 CAR. The next, non-performing assets. The bank loans which are not generating any income and which are overdue more than 90 days, they are known as non-performing assets. It indicates quality of the bank's assets. If the bank is having high non-performing assets, it is a negative indication for the bank. It is an inefficient and unfavorable condition. If the bank is having very less NPAs, then it is a favorable condition for the bank. Ratio of current accounts to savings account. Bank will have deposits in savings account and current account. But on deposits and current savings account, bank will pay interest. But deposits in current account, bank will not pay any interest. But bank will use the deposits for various purposes. If the bank is having more current account deposits compared to savings account deposits, then there is a more scope for profitability and more NII. Segmental revenue. Banks are always operating in various segments: retail segment, wholesale segment, and treasury segment, corporate segment. If the bank is operating and generating more revenue from the retail segment, then it is a favorable condition for the bank. Then presence. Whether the bank is operating in only one region, one state, or bank is operating throughout the country like Pan-India banks. Example, Bandhan Bank operating only in Eastern India, whereas HDFC SBI operating throughout the country called as Pan-India banks. If the bank is a Pan-India bank, there is a more scope for growth and development and it is a favorable condition and preferable. If you analyze these variables, these values, and then invest in banking stocks, then definitely your decision will be a wise decision and it will generate more revenue, good returns in the long run. If the information is useful for you, please subscribe and share. Thank you.